Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Wednesday, May 25th, 2016, and here are some of today's trends in the news. On the market fronts, over there in Asia to here in the States, from Nikkei to NASDAQ, everything up. Except Shanghai down a little bit, and so is gold. But otherwise, it's an up day. And on the oil front, it's up too. You know why? Well, the U.S. Energy Information said crude inventories fell 4.2 million barrels in the week to May 20th. While the decline was steeper than 2.5 million barrels forecast by analysts in a Reuters poll, it was not as much as the 5.1 million decline expected by the trade group, the American Petroleum Institute. But that was enough to push it up. And of course, the other reason why it's going up, right now there's a shortfall of about 4 million barrels a day compared to what was being pumped out because of the wildfires up in Canada, because of the disruptions in the pipelines over there in Nigeria and Venezuela, the problems that they're having. Lovely day over there in Libya. Yeah, they're having production problems too. I wonder why. Hey, Obama fixed it with that humanitarian mission, but hey, you know, why look at the facts? They only get in the way of lies. Gasoline futures were down nearly 1%. The EIA, that's the Energy Information Administration, reported gasoline stockpiles rose by 2 million barrels last week. So, here we have it. Unless these problems continue in Nigeria, up in Canada, down in Venezuela, over there in Libya, they got some problems over there too in Iraq. When these problems are solved, we believe oil right now, touching near 50, is near its high. But again, as we wrote in the Trend Alert last week, and have written continually, if there's more geopolitical and civil unrest within these countries that are oil rich and getting poor, you're going to see the prices go up. So, what else? On the economic news, why the markets went up here in the States so nicely. The market flash U.S. services PMI for May was down 51.2, down from 52.8 in April, and well below the long-run survey average of 55.6. So that's another reason why the markets went up. Interesting story here in today's Financial Times with a globalnomic twist. ECB warns of populist threat to stability. The rising tide of populism has raised the threat of economic and financial instability in the Eurozone and could make it harder for the government to service their debts, the European Central Bank has warned. Yeah, everything's going along just fine now. Could you imagine if they broke away from the ECB? It would turn into a disaster. Right now, it's almost perfect. The ECB said that a rise in political risk poses a challenge to fiscal and structural reform, implementation, and by extension, public debt sustainability. Years of high unemployment and weak growth have contributed to the rise of populist and establishment parties and anti-establishment parties in many parts of the region. Okay, let me get this straight. Years of high unemployment and weak growth have combined to contribute to the rise of populist anti-establishment parties in many parts of the region. If the ECB was such a great deal, the Eurozone was such a great deal, and the Euro group, would there be high unemployment and weak growth? And then these clowns with their arrogant attitude put out these white papers to peddle BS, to say that if you break away from us, oh, then it'll really be problems, even though we've caused terrible ones. But they keep talking about populist as though you're not supposed to maintain your nationality, your ethnicity, or your cultural roots. Ancestors don't count. Only screwing the people does and getting as much money out of them as you can. That's all that counts. Quote, these rising political risks at both the national and supranational levels, as well as the increasing support for political forces which seems to be less reform-oriented, may potentially lead to the delay in much-needed fiscal and structural reforms. They're just like the military. They have that same arrogant line. Follow us, keep everything that we do as a failure, and if you don't follow us into our next failure, then you is stupid and have no right to do it. But that's who they are. Now here's where it gets globalnomic. The report added that interest rate hikes by the United States Federal Reserve could also pose a threat to the health of parts of the global financial system. If they raise rates, which they expect to happen, it could present problems for some investors. The ECB said a rate rise could infect parts of the emerging market. Boy, I guess we've been saying that for some time now, haven't we? And here you go. Today's Wall Street Journal. Rising dollar shakes up markets. The Wall Street Journal dollar index is up 3.2 this month, reflecting rising expectations that the Federal Reserve will raise short-term interest rates when they meet in June. The MSCI Emerging Market Index is slumped 6.2% this month, putting the index into negative territory for the year. Now check this out. The Colombian peso, it weakened 6.8% against the dollar this year. In May. And the Mexican peso has fallen 7.1% in May. The Turkish lira, down 5.1%. Commodities markets, since the dollar hit a recent low on May 2nd, gold has fallen 5.1%, silver 8.1%, copper off 8.8%. Industrial metals down almost 9% this month, on track for the worst month since 2012. In more developed nations, major stock indexes across Europe and Asia are lower this year, with Germany down 6.4%, Japan down 13%, and China down 20%. Investors pulled $1.6 billion from funds that invest in emerging market stocks. Okay? I've gone over this virtually every other day. They raise interest rates in the States. You can see the implications globally. The emerging markets are going to submerge deeply because they have all this debt that they acquired through quantitative easing, zero interest rate policy when the dollar was cheap. They have to pay it back in dollars as their currencies are declining. So, there you have it. The markets, to me, this is a rally to me that has no legs to it, but a lot of lies and a lot of gambling. There's nothing to support it, considering that corporate earnings are down in the first quarter 7% for the fourth consecutive down quarter. Hey, it's a buying opportunity. On to some other news. Chinese firms keen on U.S. property. That's right. All that money they're pulling out of China. Remember our TrendsJournal story 2 years ago. China boom towns. They're buying up as America goes to war, squanders our dough, $1 trillion on fighting wars, $7 trillion Afghan, Iraq added up, plus all the costs for the wounded veterans, medical costs, etc. We don't spend it on building, we spend it on destroying. Commercial property sales have slowed in the U.S. this year, as we've been talking about, but Chinese investors are continuing to plow money into the market. Thus far in 2016, Chinese companies have purchased or are buying 47 U.S. properties valued at $9.3 billion, according to the Real Capital Analytics. That makes them the most active foreign buyer in the U.S., with more than double Canada's $4.2 billion in deals. By contrast, check this out, for all of last year, Chinese investors did 71 U.S. deals valued at $6 billion. So now they've done 47 deals at $9.3 billion. You can see where it's going. Again, you know what I keep saying. Cuba, Cuba, cha-cha-cha. Cuba to legalize small businesses. Cuba said it would move to legalize thousands of small and medium-sized businesses that have sprung up in recent years, a step that can encourage more entrepreneurship. Oh, entrepreneurship. That's right. You come to the conference for entrepreneurship. And don't forget, it's July 22nd and 23rd right here in Colonial Kingston. They're coming from Hong Kong, from Australia, from Calgary, from Chile, from Ireland to Italy. It's not a group of like-minded people. It's a group of open-minded people. Conferences, and I've been to many of them over my lifetime, nothing like this. The energy, the synergy, the intelligence, the passion, and the openness of the people that will be here. We'll have a great time, too. We have, me, like to boogie before the lights go out. Great food. We'll have the conferences in the beautiful 1774 Academy. So, anyway, going back to more entrepreneurship in the hemisphere's lone communist country. Oh, and by the way, we're selling out quickly, so please try to make it here. We'd love to meet you. Bets against Australia's bank rise. Hedge funds looking for the next housing bubble think they found it in Australia, and they're wagering more than $6 billion that the country's banks will feel the pain. We will see. Raid on Google's Paris offices raises stakes in tax battles with U.S. tech. European authorities attempt to crack down on the use of complex tax avoidance schemes by U.S. and other multinational companies to shift profits to low tax jurisdictions. What a ripoff this is. They screw us for every penny while the big guys get a free ride. They'll pay some penalties and they'll just keep it going. Hey, remember yesterday I was talking about Obama's speech over there in Vietnam? How he said how sacred a country's sovereignty is? And that big countries shouldn't bully little ones? Those are his words, not mine. Yeah. Although the United States, of course, bullied them and keeps bullying other countries, with our bully-in-chief doing the bullying. But he was also there not only to get rid of that arms embargo so the United States could sell them more weapons, but to push that Trans-Pacific Partnership. That's right, the Trans-Pacific Partnership. Now, you remember candidate Obama, or you probably forgot, back in 2008, going to that Rust Belt over there in the United States and saying that NAFTA was a dirty deal and we're going to revisit it, folks. Well, he folked us, didn't he? Because listen to what he's pumping over there in Vietnam with the Trans-Pacific Partnership deal.
We'll keep working to unleash the full potential of your economy with the Trans-Pacific Partnership. Now, here in Vietnam, TPP will let you sell more of your products to the world, and it will attract new investment. I want you to know that as President of the United States, I strongly support TPP because you'll also be able to buy more of our goods, made in America.
So there you got it, folks. I strongly support TPP because you'll also be able to buy more of our goods, made in America. Make what? What do we make in America? I forgot what you said in yesterday's clip that we played. Yeah. With this announcement I made yesterday to fully lift the ban on defense sales, Vietnam will have greater access to the military equipment you need to ensure your security. Yeah, ensure your security means getting into war, killing, and dying. That's made in America, made in USA. Our wonderful exports manufactured by the military-industrial complex. Bullets, bombs, and weapons of mass destruction, while they sell us consumer goods, shirts, shoes, computers, things to live by. But we sell weapons to die by. Let's get this straight. Vietnam is a cheap labor platform to boost the profits of multinationals. Their wages are half that of China. And United States is their biggest exporting country. That's right. We buy more Vietnamese stuff than they sell anywhere else. China is one of their biggest trading partners overall, but that's another story. So here you have it, folks. The sellout in chief. A cheap act that the prostitutes keep playing and the folks keep buying. This is Gerald Celente, and that's some of today's Trends in the News.